Hello and welcome to Premier Study in Investing. It's great to have you. Thanks for stopping by.
Thanks for joining me. Today we're going to be talking about Moderna, as you know, and we're going to be looking at some of the recent news. We're going to be looking at their pipeline. We'll be looking at some technical analysis. We'll also be looking at the fundamental valuation, and that's important because this stock has really been beaten up in the last 5 months, dropping on average about $20 per month, and it's getting down to that range where it can't continue to do that. Otherwise, the stock price is going to be at zero in about by the 1st of 2025, by January. So what should we say? Is this a bankruptcy target, or is this perhaps something that can turn around and be maybe not a 40 bagger like it was from 2019 when you could have bought it at $10 a share up to its peak over $400 a share, 45 extra money, something like that. Is there another chance that could happen again? We have analysts saying that this is a $240 target price that they're putting on this thing, and right now it's trading at about $53 today. So, wow, it may not get back to 250, but it's still, I mean, it could be a life-changing opportunity, and I think that there's always going to be that potential for bulls to come in and say, this is the future, gene editing is what's going to be the next revolution in medicine, to be able to deal with cancers, hereditary diseases, sickle cell, all kinds of things like this, right? I think there's a case for that. So let's jump in. We'll put our heads together. I think it should be fun. My name is Brian Buck. You can find me on LinkedIn, and I've just been doing this sort of for my own investing, sort of to stay sharp, as I'd love to continue to work with startups, investment and strategy firms, things like consulting, things like private equity. So rather than do 500 connection requests, I thought I'd just do this. It'd be more fun. You can like and share this, of course, but it's more interesting to actually hear what you guys have to say regarding how you're approaching these companies. I know it's pretty niche. It's just there's a million companies out there, but we've been doing portfolio analysis work, and now we're going to get a little bit more into a single company and look at how that goes. So let's start at Seeking Alpha. Okay, great. So Seeking Alpha, Moderna continues to be the most shorted S&P 500 healthcare stock in September. So this isn't the entire index, it's just the healthcare sector. If we scroll down, we can see short interest healthcare stocks in the S&P 500 increased during September and versus last month, with Moderna being the most shorted for the third consecutive time. So it's been like that in July, August, and September, and really I think those people have made a lot of money because it has continued just to be on a downward slide. If we go to one of the charts in this article, it gives us the most shorted companies by short interest as a percentage of shares float, and you can see Moderna top line 9.14% short interest, which is a lot more than the 6.29, the 5.8, the 5.8, or a little, let's just call it the 5% even for some of these other firms that are in the second, third, fourth, and fifth slot for most shorted in this sector. So at 9.14, it's really heavily shorted. I think this article points out that the S&P 500 increased by 3.6% during the month of September, while the general sector ETF for the healthcare sector dropped off a little bit. I don't think that we can just say this is a sector rotation thing that's happening, that yes, the Mag 10 has been doing well. Tesla had a good earning report and big pop on their share price to the upside. Nvidia is continuing to do well. Also, yields have come up and bond prices have come down. So those may be interesting other things, but I just don't think that that's what's happening here as far as the sector rotation. I will look at the news piece. I talked about that, and I'm not going to go deep into any scientific articles, but I'm going to go to something that I think that we all believe in generally and can comprehend quite easily, which is cancel culture and shadow banning, content creators getting strikes, big tech being told what they're allowed they can talk about or what's not, share worthy, what violates community standards and the like. So I'm going to jump over here to somebody you may know before. This is a gentleman who's been doing videos about every other day for the last 4 years related to pandemic type stuff. And I just want to show you what he's allowed to keep up and post, and it doesn't seem like it's getting banned or shadow banned. And so perhaps something has shifted. And if something has shifted, more negative and critical content about this technology is allowed to be put up, then that means that's going to influence the general feeling among potential shareholders and current shareholders, and just the public sentiment about what's happening here and is this really a safe product. Well, let's start here in the bottom right. Florida advises against mRNA, and I will show you. Okay, hey, so I needed to interrupt myself here. Some new news came in. I ended up getting a community violation, or like a warning for violating community guidelines related to misinformation, medical misinformation. Now, the really, really interesting thing to me in that regard is that the section that I was flagged for, when you get these notifications, it'll give you a timestamp so you can see like what the problem was. And the problem from this is I'm just reading verbatim from floridahealth.gov about January 3rd, 2024 article from the Surgeon General in Tallahassee, Florida, the capital, recommending that be a halt to these products related to the contamination issues that we saw on the John Campbell bit. And what's really interesting about that is a couple things. Mostly, it says that maybe we're not in any different era than we were 2 or 3 years ago, and the censorship is completely alive and well. So we'll go back to what we were saying, running with this particular video, but not taken down. They're talking about side effects varied with batches, so that all the batches perhaps were not the same. Clot stories, First Do No Pharma, which was a documentary, that is the, I don't know what those doctors, they take that oath, do no harm and all that stuff. So they're kind of talking about what are we doing here. But I want to point out a couple other things. Didn't they do one on contaminants? Okay, maybe I need to go up here. So vaccine warning to Prime Minister. That was in Australia. I'll get you up to date on that. DNA contamination in vaccines. There's another one. They're going to do a third one and a fourth one. DNA contamination, Prime Minister informed. And then proof, DNA contamination report. Oh, and then another one, DNA in RNA vaccines. This isn't being taken down. They're not getting strikes for this. I mean, this is the type of criticism that was absolutely untolerated back in 2020. And now, apparently, you can talk about such things, that such papers can be discussed on public forums like YouTube. And I don't know what switched. I have no idea what switched, but it seems to me that something has changed. I've, talked about COVID-type stuff before and gotten warnings and gotten in trouble and got a little notification, hey, you're not allowed to talk about this. And I've had them reversed too. Like I had one, I said, look, a lot of people are talking about this exact same topic. Here's this link, here's this link, here's this link. Why am I being sort of discriminated against? Why is my content being taken down and I'm getting these strikes versus other people? It's the same topic. And so I've gotten them reversed, but it's like a really odd moving target and sort of unclear as far as like what can we say and what can we not. But since we can't talk about these things, you could imagine this type of information wouldn't be good for share prices. Let's go and look at the chart. Okay, here we are at FinViz. This is the daily candle chart for 2024, and currently we're trading at $53.66. Back in, say, like June 1st, this stock was trading for $166. And so it's seen a loss over a 5-month period of something like 60 to 70%. That's why I'm saying it's not a sector rotation story. There's something seriously, I don't want to say amiss, but it's something else that's going on clearly. I'll talk about this run up. So it was trading, say, about $100, trading sideways for a few months during the early part of 2024. And it went up 60% to over 160 as they had a bit of Mpox scare in the news and maybe general media. But the big story there with that run-up is they got FDA approval in the United States for their RSV. This is respiratory syncytial virus, I think is the way. I've never been good at saying that middle word there, but RSV was approved for adults. And so you had big pop to the upside on that approval. And then it took about a month where it settled down and kind of traded sideways in the 120s. Until one morning, the share prices were down 20% after Moderna gave some forward guidance about what they're expecting for revenue going forward. And they were going to, move it downward as far as how they thought sales were going to go, and maybe based on the demand that they were seeing. I didn't listen to the full report or read the transcript, but I'm just telling you what I remember hearing from just the news articles. So down 20%, which put it into the mid 80s, we'll say, $80, $90 a share. And then it's just continued to slide to the downside. Well, one question I want to bring up in this video is, if it's at $53 and it's been losing $20 of stock price about every month, obviously it cannot continue to do that. It would be at zero in about 2.5 months, so about by January 2025. And I don't think that's going to continue to happen. So let's look at some fundamental analysis of what their assets are worth and what we can kind of think is like a floor to perhaps the stock price. Speaking of floors, one thing we use in technical analysis is something called these support lines. Now, I'm not a technician. They do have certifications for this, but it was covered in CFA as well as in Master of Finance program. And what you're essentially doing is you're trying to just analyze where the stock trades, the range that it typically trades in, and some support. This is called an area of support, something that kind of supports and keeps the price above this blue line. Well, obviously the share price has been below this support line for a number of months. That's like a negative signal. And also, not just the share price, but this orange line is the 50-day moving average, and this purple line is the 20-day moving average. So both have now broken below this area of support. I don't know how big a deal it is if the 50-day moving average drops below a support area, if that's like a huge sign, but it's just something to be aware of, especially if that's how you analyze stocks primarily. Then you could use that maybe more so than I can. I'm going to be doing some calculations on the next screen, and I just want to point out we need the shares outstanding, and it's 382 million shares, and so we'll use that to do some analysis. So as we were talking about what's that kind of bottom number, or the number that the company must at least be worth, I'm showing you the book value per share most recent quarter, and it's at $30.50. So what is that? Well, it's basically how much assets are behind each share. So assets could be cash, assets could be accounts receivable, which is we sold something on credit to somebody and they promised to pay us back in like 60 or 90 days. So we're basically going to count that as the same as cash coming in. It could be inventory, could be any like equipment. I don't think they own a lot of property. They probably have long-term leases for sure on their office space, and probably maybe or maybe not on their manufacturing facilities. I know some of those were built in Africa in the last few years, so I don't know what those are worth, but book value per share is an accounting number. It could be, a little bit squishy, but I think it's a nice number for us to use. Like, is this thing going to probably slow down under 40 as it approaches 30? Yeah. I wouldn't expect it to drop below 30 unless something really kind of nuts happened. You would need, in my opinion, you need some bad news, because the assets are worth $30 per share. Okay? We'll talk next about cash per share, $22.08. That would be another number. It's really hard to say that a company isn't worth at least what they have cash in the bank, right? To say that it's worth any less than that, you would have to say, well, the pipeline is worth negative, meaning like it's a drag actually, and we can talk about that. But just to get started, $30.50 is a number, $22 the amount of cash they have per share is a number, and I think we can use both of those. So I'm just saying, buying puts with strike prices at 25, I don't know, that's a little hard for me. 30 seems a little bit iffy, 35 seems more reasonable, 40 and $30 strike prices on puts, that seems okay to me. Below 30, it's a little bit hard. You might be thinking, well, how much debt do they have? And they really don't have a lot of debt. I'll do the numbers for you in the next screen, but it's about $3 of debt per share. So you could say that money is going to go first to bondholders and creditors in the event of an insolvency or bankruptcy. And so we could subtract $3 off each of these two numbers. So book value per share would drop from $30.50 to something like $27.50. Still not a big difference. Cash per share would drop from 22, subtract off the $3 of debt per share, leaving us somewhere around 19. So it's not like they're heavily indebted and you could say like, oh, this company's worth $10. It's probably not worth $10. It's probably worth more than $10. But we'll continue to talk about that. Current ratio is 4.09 for those who are familiar with that. It's the current assets over the current liabilities. Okay, so if we head over to Yahoo Finance, we go on the Statistics tab under Moderna, we'll find a beta of 1.66. And I think this is an important number. It's sort of like a multiplier. You could think of it as this, a multiplier for how this stock moves compared to the broader market. So it moves 1.66 times, meaning that if the broad market goes up 10%, the stock would be up 16.6. And the same would be true for the downside. Broad market goes down 10%, the stock will be down 16.6 times, or 16.6% would be the right way to say it. So you can see that it's a bit more volatile than the average like S&P 500 index. Okay, here I'm just going to do that quick calculation on the debt level. You can see they have $1.27 billion of debt. That's total on the balance sheet. And so our shares outstanding are in millions, and this number is in billions. So what I'm going to do is just type this out in millions, and then that way we have like apples to apples comparison. So the way I would do that is just 1,270 million is equal to this number here. And now that we're in millions, we have our number stated as millions, we can subtract off, or divide by, we're going to do the $1,270 million of debt divided by the 382 million shares outstanding. Our millions will cancel, and we'll get about $3.32 of debt per share. So that's how I was subtracting that off in our prior screen. The same numbers here match. Book value per share $30.50 and cash per share $22.08. So those are good numbers. Those match. Sometimes websites get it wrong, but these look like they're confirmed by each other. So that's good. How about let's look at the analysis tab next. Okay, here I want to take a second and look at the analyst price targets. The extremes from our analysts gives us a low target of $46 per share. The high is $238 per share. $238 per share. That is about 5 times from where we are now. So a 5-bagger, if that analyst is correct. Let's look down, instead of just taking our two numbers, our most extreme analysts, let's go down and look at these 10 that we have. Starting with Goldman Sachs, they have a price target of $139. Barclays $125. We have a $115. We have a $75. We have a $70. We have a $55, a $110, and an $80. So you can see that that's like a little bit tighter group, a $139 being the highest and $55 being the lowest. None of these are really over $150, and so it seems sort of interesting. One of the things I've never liked about these price targets is that, as far as I know, there's no time frame put on when they think it's going to arrive at these numbers. And so is that what they expect the stock to be at in 5 years into the future, like 2030? Not really helpful if I'm thinking, about a 2-year time frame, right? So that's something that's always kind of bothered me, to be honest. I will say one thing here and sort of speculate or draw our attention to. If you were an analyst and you had the stock at $238, if you've ever done equity analysis or taken a course on that, you know that it's largely based on assumptions. It has a lot to do on the growth rates of the revenue. This company has a huge pipeline. It also has some to do with what they consider as the interest rate. Interest rate does affect a lot your final price target. So there's always there's an art and there's a science to equity valuation. I really love that course. I was able to get perfect scores in that course when I took it in graduate school. So there are some other courses that kind of paid the price for just how much I got into that modeling part. But I thought it was such a key piece of what all the finance is really about that I just got really into it. So I think if you're going to have a high range like that, there's two reasons why I could see the stock going back to $400 or $500 a share. And that would be, I think the most reasonable is you hear some scary stuff coming from, major elite kind of global organizations, World Health Organization, Klaus Schwab Group with Davos, saying that there could be something like a cyber something like pandemic or something more like this that could happen. Okay. I don't know how much stock I want to put in that, but what I will say is I think a lot of people for the first time ever heard this term gain of function research in the last 4 years. And that was something we never heard about before. And from my perspective, I would ask, has that come to an end? For me, it's very hard to say that that's no longer happening today. I think militaries and governments are going to be very interested in that without going on and on about maybe what happened with the Hong Kong protests or maybe what was going on with the Trump tariffs 4 years ago, right? For sure, as far as I can tell, there's a lot of people that don't like gain of function research. They think it's a dumb idea. They think it's just playing with fire. But who's been able to stop it? Has there been any broad reaching accords that aren't being violated, that are very strong, robust, and being upheld? Globally, I don't think so. So what does that mean? For me, at least, I think that the lab leak thing has happened in the past. Did it happen 4 years ago? I guess that's up to you, what you think. But could it happen in the future? Why not? Of course. I think, of course, it could. And so which company in that scenario is best suited to respond? Well, one of the key things that everybody loved about the mRNA platform was that you could update and reformulate vaccines very, very quickly and then mass produce them. So in an event if you have a redo of 2020 with a new outbreak with a novel virus, I mean, who's the best situated to handle something like that? I would say that would be this company. That's what they do. That's about the only thing they do. And so the bad part of it is they kind of are a stool that stands on one leg, the mRNA platform. But the upside of that is if you need to move through something quickly, they have the relationships with the regulators, they have worldwide exposure, they've done this before, they have the manufacturing facilities, and they're really ready. So I think that's the best bull case, that this thing explodes to the upside again, and perhaps it's not it's not going to go from $10 a share to $400 a share, being a 40 bagger, but it might go from 40 to 400. That'd be 10x, right? And that'd be pretty good. That could be a game changer for investors, certainly. So is that going to happen? Well, nobody can tell, obviously. Is there a probability that happens? I say yes. I think I haven't heard anybody anywhere being ultra serious about bringing this gain of function research to a stop and to a halt. So if people are going to continue to be messing around with that stuff, it could very likely happen in the future. And so I think that makes this $238 price target a little bit on the low side. But I mean, you don't want to embarrass your firm, right? And you don't want to just make yourself a laughing stock by, being way, way, way higher than all of your other, analyst friends and colleagues and probably competitors, to be honest. So 238 per share is pretty high, though, I would say. I want to start by looking at the revenue and then start to make some extrapolations and think about if it's a bankruptcy target, when would you expect it to go to zero or really get in trouble, and how long can they hang on? So first, we're going to start with revenue. Revenue is like sales. It's a synonym for sales. It's the top line on your income statement. It's the money that was brought in through your business activity. And we have, for these full year reports, 24 analysts giving us numbers for full year 2024 and full year 2025. And if we just go with the average, the middle ground for these analysts, basically flat in revenue for the next 14 months. This is October 2024. Full year 2025 is about the same as full year 2024. It's $3.22 billion for 2024, and it's $3.25 billion for 2025. So that can only really mean two things. Either nothing new comes on the market and the current stuff keeps selling as it is, demand stays where it's been at, and pricing stays where it's been at, and nothing changes. Or the current stuff sort of falls off in its ability to produce sales, but they bring something new to market, and that kind of keeps us where we are. I think those are the two reasonable scenarios of what you could see happening. But they're expecting nothing great to happen in 2025. So 14 months of really nothing burger as far as top line on the sales. Okay? So I think that's really important. I think that's really, really important. That they're not expecting some explosion to the upside in price based on revenue estimates. Okay? I think that's how I would say it. Let's look at earnings. Earnings is another word for profits. So it's your revenue minus your operating expenses takes you to your profitability, right? And so we have a current year 2024, we have a next year 2025, and if we go down here, they also give us a year ago earnings per share. Okay? So I'm going to look at this year ago. That'd be 2023 full year, right? 2023 full year was a loss of $12 a share. Okay, if I round to the nearest whole number, they lost $12 per share. Not good, right? Very negative. And you've seen that a lot. They used to sit on a huge pile of cash, something like $40 of cash per share. And as we know from this video and what we just looked at from the most recent quarter, they're currently at $22 of cash per share. So they burned through a lot of cash, and part of that is because they lost $12. I mean, it probably hit their cash. Their cash number is because they didn't borrow, so it had to come from somewhere. It came from cash, most likely. $12.33, lost profits, negative profits, bleeding cash in 2023. 2024, what are they expecting to happen? They're expecting to lose $10 a share. So we've had half the quarters be reported already for 2024, and we have 2 more to go. So we're halfway through 2024 in terms of reporting cycle. And then 2025, what do they expect to happen? Loss of about $8.50. So what can you say from those estimates? Well, one, you can say all 3 very negative. Negative 12, negative 10, negative 850, right? This is not good. And it's for a 3-year period. Number 2, you can say, is it improving or getting worse? Well, the answer to that is it's improving. It's less and less negative each year, and so it's creeping. I think that's the right word to use, creeping towards profitability at a very slow rate. They're bringing in about, it's improving by about $2 per share on earnings every year, something like that, right? That means it's not really fair to extrapolate just using 3 data points, but it means that at this rate, it's going to be 2026, you don't expect it to be profitable at this rate. 2027 still might not be profitable. 2028 might not be profitable at this rate, right? One thing you can look at, you also are given a high and a low estimate on earnings for 2025. And even your most optimistic person is still showing a loss of $6 a share. So out of your 24 analysts, find the most optimistic one, and for 2025, still plan on losing $6 a share. Okay? So your more pessimistic analyst would be like, it's going to get actually worse in 2025 in terms of profits. So that's just something to think about. Now, one thing that did not originally occur to me, but that I thought was super interesting, if you're like in the camp of this is perhaps not a failed technology, but this is a technology with very serious problems, with the athletes keeling over on the field, with people having debilitating, serious adverse events. If you do any of the numbers about maybe the potential underreporting on yellow card in the UK or VAERS in the United States, that perhaps a lot more people had some kind of serious adverse event than we have reported. Pericarditis, the heart, damage, the biodistribution, which means the injection material doesn't stay in the shoulder and the deltoid muscle, right? In the injection site, it biodistributes, so it's going into the brain, it's going in the reproductive organs, it's going all throughout the body. There was a gentleman that it was really interesting, also that's been talking about some of the negative sides, and he does a YouTube channel. His name is Dr. Razek. It's hard for me to say his name. Dr. Mikola Rajic, and he runs a channel called Genomics. He is essentially a researcher, and one of the things that he's really been on is something called IgG4. IgG4 is elevated, he's been saying, in people who have taken mRNA-based vaccines. And so you have an elevated level of this stuff, and what does it do? This thing, IgG4, turns down your innate immune system, from what I've gathered. And so they're postulating or hypothesizing, well, A, you don't want to have a whole bunch of stuff that's turning down your ability of your immune system to function as it normally would. And then they're saying perhaps that's the sort of explanation for why you have increased all-cause mortality since the rollouts. Perhaps that's why you're seeing turbo cancers, as they call it, or like extremely aggressive, fast-moving cancers. That essentially with the immune system turned down, it's possible that these diseases are just running wild on people. And so you have those type of researchers as well, not just the Surgeon General in Florida, not just this health individual in the Australian government, but a lot of people saying, this is bad. And so if you're thinking, well, perhaps this is a failed technology, when could you see this go to zero? Well, let's just do base case. At the current rate, what is the cash burn really? Well, we can figure it out. We can tell that they have $22 of cash per share, most recent quarter, right? And let's just say for the full year of 2024, they're going to lose $10 on negative profits. And let's just say that that's going to be paid for out of cash. Okay, well, let's say half of 2024 has been reported on, and we're expecting for the full year to be a loss of $10. We're expecting half of that to come between now and the end of 2024, as far as our accounting would show. And so we would expect half of 10 is 5. We would expect another $5 of losses per share. And if we subtract that off the $22 of cash that we know exists, most recently reported Q2, we take the 22 minus $5 of losses to come in this year would take us to $17 of cash going into 2025. Okay, well, $17 of cash is a lot of cash. That's not a bankrupt company, right? They have resources at hand. And, you got to think of someone who's swimming in the ocean. They got caught in riptide, right? What is that person going to do? They're going to deploy every last resource, right? Before they go under. They're going to float on their back, just wait until maybe they get pushed all the way out and they're out of the riptide. Then they do like you're told, swim parallel to the shoreline and then come back in, right? Or maybe they're waving, or maybe they're screaming, they're looking for boaters, they're looking for surfers, they're doing anything they can, right? Well, that's what this company is going to do. And going into 2025, they're still going to have $17 of cash available per share. Now, what's going to happen? Well, we're told these analysts expect them to lose another $8.50. Okay? $8.50. So 17, let's just call it minus 8. That takes them down to $9 of cash per share at the beginning of 2026. So just based on that base case, nothing crazy bad happens, nothing crazy good happens. Things go as the analysts expect on average. They're still going to have $9 of cash per share going into 2026. And let's say that they do a repeat as far as the negative profits in 2026 at, let's just say, another $8 loss per share. So they'd have $9 going into 2026. They'd lose $8. They'd be able to go into 2027 with $1 of cash per share. And that's before they even have to borrow, right? And a lot of these companies, they do borrow. Tech companies, this biotech, pharmaceuticals, borrow all the time. So they could dilute their shares, issue more shares. They could, tap their debt facilities, and, they could be going 2025, 2026, 2027, at least just with the cash on hand. Then through 2027, maybe if they do some dilution or they tap their credit facilities into 2028, perhaps into 2029. So for me, it's very hard to see that these guys are going to drown in 2025, to use that analogy. They have too many resources at hand, okay? Now, that's the base case. Some people are saying, well, What happens if, some of these regulators, Australia, Florida, what if other states catch on? What if New Zealand goes along with this? What if it's determined that, man, this really is bad, some groundbreaking paper, as if there haven't already been a lot that have been really bad, plus the anecdotal kind of news that you can get from people. So what if they start to lose their authorization to sell their products? Well, that's a great question. We can do the math on that too if we go back down to the revenue. Remember, we're given expected revenue on average for 2025. So let's use that number, 3.25 billion. And we'll just do the same thing we did before. We'll figure out how much revenue is coming in per share. So 3,250, if stated as in millions, would be equivalent to 3.25 billion. So $3,250 million of revenue divided by the shares outstanding of 382 million. Then millions will cancel, and we have $8.50 of revenue per share expected to come in 2025. Okay? Now, remember, I said we have $22 of cash now. We're expecting at the beginning of 2025 to have $5 less than that, so we'll be at $17 of cash per share. We know that just based on their normal spend on R&D, that they're expected to lose $8.50. And if their revenue dries up, that'd be another $8.50 that they would have to come up for that they wouldn't have, right? They wouldn't have coming in, so they'd have to tap basically like their bank account to pay for that. Well, $8.50 and $8.50, that's $17. $17 is how much I estimate they will have per share at the beginning of 2025. Meaning they're not going to run out of money, even worst case scenario that they can't sell any of their products. They'll still have enough money to go through the end of 2025 and into January 2026. So they could scramble around. Now, would the share price be just cratering at that point? Yeah, you would expect that it would be under $20 a share easily. I mean, at that point, you would definitely say now the pipeline is a drag. It does have a negative value because there's a bunch of assets tied up in this pipeline. You have a bunch of people that you have to pay to work it. It's just sucking up money, and it may be a flawed technology. At that point, you could say now it's just a matter of time. But how likely is that to happen? If you think it's a flawed technology, it needs to be the flawed technology, and you have to have the science and the political will. I think the political will is a big problem because you're going to have a huge outcry from the public, similar to all the pressure that was put on people to use this technology in 2020, 2021, 2022, and up to today. You would need the opposite for politicians to be like, okay, really take this on as their thing. You have a few people. Andrew Bridgen comes up a lot in the UK as someone who's outspoken, but primarily the trend has been that people are silenced, people are, forced to lose their doctor's license, people are, going to be like basically ousted by their scientific community for writing the wrong papers, right? Or the wrong papers won't get published. I'm using wrong in a certain sense, but you know what I'm saying, that you need the political will to make that decision. And I think currently it would be political suicide for any politician to say, we're not going to use these anymore. Especially in America, right? Because Pfizer and Moderna are American-based companies. So especially in America, it seems like it would be very, very difficult to sort of admit to the world that like this great invention that we came up with doesn't work. To say that publicly would definitely be concerning. It would not be politically a very bright, shiny moment to have. You know what I mean? So I think that's a hard one to really say, whether that could even happen. Obviously, it hasn't happened yet, right? So I think the only other way that you could paint a more dire situation than that for this company is that they somehow lose their authorization. These products are put on hold in a big way in major global markets. You got to remember that Pfizer is also partnering with BioNTech, which is based out of Germany. So there's U.S., German, there's trade partners, there's, I don't know. But what if Moderna, to make things worse, lost a legal case? So they are under litigation from Arbutus Pharmaceutical. We've looked at that before. And there's been multiple patent infringement cases. Moderna has lost one against Arbutus. Moderna has won one against Arbutus, and there was one that was thrown out or inconclusive. I think there's going to be more. I think Moderna, based on my memory from following this in the past, has something like 80 patents that they've applied for and maybe hold in the United States alone. So patent infringement, if they lose that, I guess that's another way where their revenue could be seriously brought to a screeching halt. Moderna's suing Pfizer, and Pfizer is countersuing Moderna, so that you have intellectual property disagreements and disputes. Obviously, those are going to be expensive with the legal fees behind that, and probably sort of an annoyance with their board and with their executive team. That's the worst case scenario I can think, that they lose their approval and they get sued. And you would need both of those things to happen for them to run out of money before January 1st, 2026, as far as I'm calculating it here. So, bankruptcy and share price are different things. Share price could be in the teens without them being officially bankrupt, but everybody knowing that they have nothing. They have nothing. So that thing could turn really quickly. Let's go look at their pipeline, and I want to talk a little bit about trying to make the bull case that this is maybe another 20 bagger, and how to maybe play this as far as some option strategies. So this is their pipeline. You can see phase 1, 2, 3 in commercialization, and I think that's worldwide rights for all of the stuff that they're running. Of course, commercialized is their Spikevax. It's their lead product, and it's been making most of the money for them. They have a next-gen vaccine for COVID-19. I'm not sure what that's about. A phase 3 flu, 4 more phase 3, 4 more phase 2 for flu. Then they also commercialized this RSV vaccine like we talked about for adults, older age adults is what it says. They're doing some combo stuff with flu and COVID and RSV. Then, of course, they have I think it's the same formulation, just lower dose for teens, and then for pediatrics, worldwide authorization for that. Then they have some latent, so cytomegalovirus. This is phase 3. And this is where I'm going to say that most of the rest of the stuff we're going to look at is nothing novel. And I think that they need something novel to really be able to take full advantage of the fast and flexible platform that they have. Because most of these things, as far as I'm concerned, we've been living with. It's no big deal. I don't know people that get vaccinated for these things or that would be interested in getting a vaccine for them. Also, I think a lot of court cases come out saying that it's illegal for employers to require vaccines in order to come to work. We've toyed with, and the remote work has kind of stuck around for a lot of industries. It may be advantageous to employers to some degree as well, and a lot of people really like it. For sure, the hybrid thing is very popular, for sure. So without being able to threaten people's jobs and their livelihoods and their pension and their insurance, right, through the employment, I think it's going to be hard to really turn the screws on people to make them take some of this stuff if they don't want to. And I've never heard of anybody wanting a vaccine for cytomegalovirus, for Epstein-Barr, for herpes simplex virus. I mean, I guess VZV is varicella zoster. This is chickenpox and shingles. People do get that, but for something like that, it's already available. So there's nothing groundbreaking by Moderna coming out with the same product that we've already had for a long time. HIV vaccine, that's in phase 1, so who knows how that's going to go. Neurovirus, I've had this before. I know a bunch of my friends had it when I was working in Japan, but never hear about it in the States. Never heard anybody that's had it besides friends that have traveled that part of the world. Never heard anybody, being diagnosed or wanting a vaccine for it. They have 2 different vaccines for that. Lyme disease is a big deal. I hear people talk about that. Hyper debilitating if you get a bad case. but it seems like it's pretty effective if you just take doxycycline, which is just an antibiotic, like a 14-day course. Doxycycline is used for a lot of different things, and apparently if you catch it early, you can really just have a high chance of just knocking out any long-term symptoms, assuming that you have like a tick bite and you are exposed to that. Zika, I don't know. If you go to North Africa or Central Africa, maybe Zika, but from where I live and from where I travel and from what I hear I talk to people in the Middle East. Primarily I have friends in the Middle East, so no big deal from what I'm hearing for that for most people. Nipah, no idea what that is. Mpox, seems like it was this thing until all of a sudden it wasn't, and now we don't seem to hear much about it at all. They do have some cancer vaccines, 3 in phase 3, and that would be really cool. The thing I've always thought of, how cool would that be if they could get it to work and clean it up where you don't have the DNA contamination problem, you don't have the lung clots or the vein clots, you don't have the strokes, you don't have the heart damage, you don't have the biodistribution where it's potentially like infecting or causing problems with people's reproductive organs. You don't have, we talked about the heart damage stuff, and then you don't have this elevated IgG4 stuff. That's a lot of problems to solve, right? If you could get this without all those problems, how cool would that be? That would be really cool, and I think that's, again, the bear case, the 20x, that in the next 5 years, they're going to solve all these problems. But I just don't think that that's going to happen in 2025, 2026, or 2027. So I think it's more of a stock that's going to continue to be beaten up. And if they can't really fix these problems, it's too much for their PR team, right? To come and smile and say, hey, we're leading innovation and safe and effective, because I think everybody kind of rolls their eyes at that statement now. And so, I think a lot of people feel lied to. Checkpoint vaccine, you have some rare intercellular diseases I'm not that familiar with. And then they had this interesting inhaled pulmonary therapeutic that they're doing with Vertex to pay milestones and royalties. So some kind of, but it does have it's called the mRNA 3692. So I don't know if they're developing like an inhaled version or how that would work I don't know how that would work, but they are using the mRNA like call sign, at least for that product, and that's for cystic fibrosis. Okay, so that's kind of the whole spiel. Yeah, okay, so that's kind of the whole spiel I have for you as far as what I think could happen with this, which is essentially, I think it has some real problems. There's some science coming out that says this is not good, and you have some politicians and health regulators, calling the politicians in power and saying, hey, this is a problem. We're concerned about this DNA contamination or other issues. There was the HOPE Accord that was signed by a number of doctors and medical professionals and concerned citizens, perhaps politicians as well. Are we really at the breaking point where it's like politicians can go ahead and make some kind of move like that and say, hey, we found out that this thing isn't very good on the safety profile? I still think it would be very, very unfavorable, because it's mostly older people that vote, right? And it's mostly older people that are concerned about this disease affecting them, right? Taking them out early. And I think who are the ones that are primarily still continuing to take boosters. I'm not 100% sure, but just thinking about it. Because it was never a disease that really, at least COVID-19 was never a disease that really affected young children, right? Or middle-aged, healthy people. It was for the immunocompromised and the elderly. And so, something really, I think, drastic would have to happen to change the political will in order to put this on an indefinite halt. Now, it's happened before, right? We saw that with AstraZeneca. We saw that with Johnson & Johnson, where they saw the clotting, and they said they put it on a hold, right? And then ultimately, Johnson & Johnson has pulled their product completely. I'm not sure what AstraZeneca has done. I know Novavax has brought to market sort of a traditional COVID-19 vaccine. So, but it's not like we haven't seen products pulled in the past or halted for a momentary time because of safety signals. So it could happen. It could happen. But it seems like there's a lot of pressure for everybody to just kind of nod and go along with it. Or there's also been I've thought, what is all this new hype about diet that we're hearing about constantly, right? And I wondered, could that not be just people looking for a scapegoat for all these excess deaths and all these disabled people? Could it not be really convenient just to say, I'm not saying that there's not problems with the diet and the food, but I'm just saying to move all of the blame and the guilt over onto the food manufacturers. I've kind of wondered if that's not what's happening in the fall of 2024. So I don't think it's a strong company. I think there's problems with the products and with the technology, obviously. But is it really going to go bankrupt? I don't see them going bankrupt in 2025, just to reiterate. I could see the share prices continue to get beat up, but there is going to be resistance once it starts to trade somewhere around the book value per share of like between $27 and $30. There's going to be buyers at that point. There's going to be some bulls, Kathy Woods, Arc Genomics, somebody that's going to say, hold on, let's just buy this now. Let's pray that this company, through the use of cash, debt, and dilution of shares, can make it to 2030, that they can somehow work out the kinks, at least good enough to get it passed through the FDA and approved back for commercialization. And then we're back on our way to $500 a share, especially because they have that option of what if there's another breakthrough, a breakout thing of gain-of-function research, some kind of lab leak thing, some kind of militarization use of biowarfare, or some kind of like Klaus Schwab for the people that are kind of preppers and waiting for the big baddies to come and, make us all global slaves, 1984, Brave New World, that type of scenario. You would have those. That would be like the kicker option, right? That genome editing and gene therapy is the future, and you get this like doomsday or kicker thing on the side for $30 a share. I think there's going to be people that would buy that at $30 a share. And so for it to drop, it'd be interesting what would happen under 40. But I don't see it dropping below $30 very easily in 2025, barring some just crazy thing. If something crazy happens in 2025, yeah, it could very easily be a bankruptcy target. Yeah. So I think the way to play it is you can look for the downside, use straddles, Google that, but it's basically where you're using cheap options. They're cheap because you're buying them deep out of the money and you're expecting either something very dramatic to happen to the downside or to the upside. And when you own those types of strategies, you're basically hoping that you lose a little bit of money on the side that you're wrong on, but on the side that you're right on, you make a lot. And so when everything washes out, you end up being up big. And so you don't care if it's a big upside or a big downside move. You're just looking for a big move either way. Where you get really crushed in that strategy is if it just sits at $50 for months and months and months, and it just trades, $40, $50 and nothing nuts happens. Then you stand to lose some money. Depends how big you want to go on that. But that's kind of what I'm thinking in general. Hope working through those numbers and some of the news and then just some of the logic is helpful. Like I said, my name is Brian Buck. I'm the creator of Premier Study and Investing. I went to graduate school. I found finance to be extremely interesting. At this point, I'd love to work consulting. You can find me on LinkedIn, Brian Buck, or it's probably easier just to search Premier Studying and Investing. And I'm using this as a way just to kind of inform myself, have some fun on YouTube. If you want to subscribe and like, and it'd be fun to chat with you about what you think, especially about this stock. I think it's a very, very interesting stock. And then, if you're looking for someone to do analytics in private equity, hedge funds, PE, something, management consulting like that, I'd love to come in and do due diligence or something similar. Okay, well, best to everyone. We'll talk to you soon. Bye.